Hello everyone, welcome to the market opening bell for Tuesday, April 21st, your 10-minute guide to the stock market. Hong Kong stocks traded mixed but closed higher on Monday. The Hang Seng Index opened 44 points higher, then extended gains to a high of 251 points at 26,411, before closing up 200 points or 0.8% at 26,361. The Asia Index rose 54 points or 0.6% to close at 8,899. The Hang Seng Tech Index gained 22 points or 0.5% to close at 5,065 points. Total market turnover was 241.4 billion Hong Kong dollars. The U.S Iran ceasefire agreement expires this Wednesday, and with uncertainties surrounding the prospects of negotiations, the Hang Seng Index is expected to fluctuate within a narrow range between 26,000 and 26,500 points. Southbound trading total $100.1 billion, while southbound funds recorded a net outflow of $3.909 billion. Among the flows, net buying included China Construction Bank totaling $572 million, PopMart $409 million, CNOOC $354 million, Yangtze Optical Fiber and Cable $202 million, Hua Hong Semiconductor $165 million, SMIC $134 million. Net selling included Tracker Fund at $3.478 billion, CSOP Hang Seng Tech ETF at $1.111 billion. According to statistics, southbound funds have been net buying CNOOC for 7 consecutive days, totaling $2.412 billion. Net buying PopMart for 5 consecutive days, totaling $2.41 billion, and net buying Yangtze Optical Fiber and Cable for 3 consecutive days, totaling $834 million. On the mainland, the 3 major Asia indexes showed mixed performance, with the Shanghai and Shenzhen indexes performing strongly. The Shanghai Composite Index closed at 4,082, up 30 points or 0.8%. The Shenzhen Component Index hit a new high in over 4 years, closing at 14,966, up 81 points or 0.6%. The Chinex Index closed at 3,677, down slightly by less than 1 point. Combined turnover in Shanghai and Shenzhen markets reached 2.57 trillion yuan. The renminbi central parity rate against the U.S. dollar was 6.8648, down 26 pips from the previous day. Data released by the National Energy Administration showed that total electricity consumption across society in March was 859.5 billion kilowatt hour, up 3.5% year-on-year. By sector, primary industry recorded 11.3 billion kilowatt hour, up 6.7% year-on-year, driven by spring plowing and higher agricultural automation. Secondary industry recorded 570.8 billion kilowatt hour, up 2% year-on-year, of which industrial electricity usage was 566.1 billion kilowatt hour, up 2.3% year-on-year. High-tech and equipment manufacturing electricity usage reached 105.4 billion kilowatt hour, up 5.6% year-on-year. Tertiary industry reached 160.1 billion kilowatt hour, up 7.7% year-on-year, among which charging, swapping services and internet data services recorded 13 billion kilowatt hour, up 51.3%, and 8 billion kilowatt hour, up 40.1% respectively. Urban and rural residential electricity recorded 117.2 billion kilowatt hour, up 5.2% year-on-year, reflecting consumption recovery and wider adoption of smart home devices. Cumulative electricity consumption in the first quarter reached 2,514.1 billion kilowatt hour, up 5.2% year-on-year. The growth rate closely matched economic growth, demonstrating electricity's role as a stable economic barometer. The China Electricity Council and State Grid Energy Research Institute forecast that full-year electricity consumption in 2026 will reach 10.9 to 11 trillion kilowatt-hour, representing growth of approximately 5 to 6%. As AI computing power infrastructure continues to be deployed, electricity demand is expected to keep shifting toward digitalization and greening. According to a report by the International Energy Agency (IEA), global electricity consumption grew by 3% last year. Electricity demand grew about 2.3 times faster than overall energy demand. Electricity demand from electric vehicles and data centers recorded significant increases of 38% and 17% respectively. However, industry, household appliances and commercial buildings remain the main drivers of growth. In advanced economies, electricity demand grew 1.6% year-on-year, with the United States showing the strongest increase. In the U.S. market, data centers accounted for about 50% of total electricity demand growth, with the remainder coming from residential, industrial, and transportation sectors. China's electricity demand was also strong, but due to improved energy efficiency and a slight decline in air conditioning cooling demand, the growth rate was lower than in 2024. Overall, global energy demand growth slowed to 1.3% last year, slightly below the 10-year average. On the supply side, solar energy became the largest contributor to global energy supply growth for the first time last year. The IEA noted that solar photovoltaics contributed more than one quarter of the increase in global energy demand, more than any other energy source. Natural gas ranked second with a 17% share. Global oil demand grew by 0.7% in line with expectations, reflecting the continued weakening of raw fuel demand due to the rise of electric vehicles. In terms of coal usage, China's coal consumption declined due to increased installation of green energy capacity. In contrast, the United States saw increased coal demand due to high natural gas prices, triggering a gas-to-coal shift in power generation. However, global coal demand growth has already slowed in 2025. Hong Kong-listed photovoltaic and solar stocks rose collectively. On the news front on April 17, multiple ministries, including the Ministry of Industry and Information Technology, the National Development and Reform Commission, the State Administration for Market Regulation, and the National Energy Administration, jointly held a symposium on the photovoltaic industry to deploy measures for regulating competition order in the sector. The meeting emphasized the need to thoroughly implement the Party Central Committee and State Council's directives on regulating photovoltaic industry competition, to deeply understand the importance and urgency of addressing involution-style competition, and to solidly advance the anti-involution work in the photovoltaic industry. The government will use energy consumption standards, quality supervision, and market-oriented measures to force the elimination of inefficient production capacity. Data shows that as of the first half of 2025, the industry has already phased out approximately 30% of outdated capacity, with the pace of expansion slowing and stronger regulatory control from the visible hand. Industry capacity utilization is expected to gradually recover from its low point, between 40% to 70%. CATL announced that its Sheldon Ningbo United Innovation New Energy Investment Management Partnership has transferred 58 million A shares, representing 1.27% of the total share capital. The preliminary inquiry price was set at 410.34 yuan per share. The shares to be transferred in this inquiry have been fully subscribed, with 30 transferees confirmed. The shares cannot be transferred within 6 months after the transfer. Ningbo United Innovation currently directly holds 284 million ZTL A shares, representing 6.23% of the company's total issued shares, including A shares and H shares. China Mobile released its first quarter results, showing a pattern of slight revenue growth but declining net profit. Operating revenue was 266.478 billion yuan, up 1% year-on-year. Of this, main business revenue was 219.9 billion yuan, down 1.1%, while other businesses, including cloud computing and computing power leasing, contributed 46.6 billion yuan, up 12.7%, becoming a key growth driver. Net profit was 29.342 billion yuan, down 4.2% year-on-year, with earnings per share of 1.36 yuan. EBITDA was 76.7 billion yuan, down 5%, and the EBITDA margin fell 1.8 percentage points to 28.8%. From January 1st to 6 mainland China reclassified data and SMS services from value-added telecommunication services to basic telecommunication services, raising the VAT rate from 6% to 9%, which directly impacted main business revenue and profit. First quarter capital expenditure was approximately 30.4 billion yuan, down year-on-year. Full-year guidance is 136.6 billion yuan, down 9.5% year-on-year, reflecting the end of the high investment phase of 5G and a shift of funds toward computing power network construction. Tianqi Lithium issued a profit warning, which is positive, expecting net profit attributable to shareholders for the 3 months ended March to be between 1.7 billion and 2 billion yuan, representing a year-on-year increase of 1,530% to 1,818%. The main reasons are favorable factors such as the development of the new energy industry and growth in downstream demand. The average selling price of the company's main lithium products increased significantly, driving a substantial rise in operating revenue. In addition, its important associate, SQM, is expected to see a sharp increase in quarterly performance, leading to a corresponding large increase in investment income recognized by the company. GDH issued a profit alert, expecting to record a full-year loss of between 300 million and 350 million yuan for the year ended March 31st, compared with the net profit of 405 million yuan in the previous year. The main reasons are a decline in the number of single-digit transactions and average selling price per item, leading to lower revenue and reduced gross profit, as well as a decline in shopping street income. Victory Giant Technology, which will be listed today, traded in the grey market on Philip Mart yesterday at $333, which is 58.7% or 123.12 Hong Kong dollars, higher than the IPO price. Excluding handling fees, each bought lot 100 shares would yield a paper profit of $12,312. Victory Giant Technology is a global leading printed circuit board (PCB) manufacturer, particularly noted as an important supplier to NVIDIA. The company focuses on the R&D of high-precision, high-density circuit boards. Its main products include high-end HDI, high-density interconnect boards, mainly used in AI computing cards, high-end servers, and smartphones. Its HDI products ranked number 1 globally in market share in the first half of 2025. Multi-layer boards capable of producing over 100-layer high multi-layer boards used in data center switches, base stations, and other equipment, and flexible circuit boards expanded through the acquisition of Thailand's APCB and other methods used in automobile, used in automotive, electronics, and medical devices. For the full year of 2025, revenue reached 19.292 billion yuan, up 79.8% year-on-year. Net profit was 4.312 billion yuan, surging 273.5% year-on-year. The U.S. seized an Iranian-flagged cargo ship over the weekend, pushing geopolitical risks higher. Oil prices surged nearly 6%. The three major U.S. stock indexes closed slightly lower. The fear gauge VIX index rose 1.4 points or 8% to 18.9. The Nasdaq Composite fell 64 points or 0.3% to close at 24,404, ending its 13-session winning streak. The S&P 500 declined 16 points or 0.2% to 7,109. The Dow Jones Industrial Average edged down 4 points to 49,442. Small cap stocks outperformed, with the Russell 2000 rising 0.6% to close at 2,792, hitting a new record closing high and also touching an all-time intraday high. The Nasdaq China Golden Dragon Index, which tracks Chinese stocks listed in the U.S., fell 23 points or 0.3% to close at 7,207. Tesla dropped nearly 2% in response to reports claiming Tesla would soon begin mass production of robots at its Shanghai factory. Tesla stated that it has no specific plans to mass-produce robots at the Shanghai Gigafactory and described the report as incorrect information. Chip stocks bucked the broader market decline. Nvidia rose 0.2%, ARM surged more than 5%, and Marvell Technology jumped 5.8%. According to reports, Google's parent company Alphabet is in discussions with Marvell Technology to jointly develop two new chips designed to run artificial intelligence models more efficiently. Reports indicate that one chip is a memory processing unit designed to work in tandem with Google's Tensor Processing Unit (TPU). The other is a new TPU specifically built for executing AI models. The two companies aim to complete the design of the memory processing unit as early as next year, followed by delivery for trial production. Our stock pick today is InSilico, stock code 3696. InSilico is primarily engaged in drug discovery and pipeline development, software solutions, and other discoveries in non-pharmaceutical fields by utilizing a generative artificial intelligence platform. The group has leveraged its self-developed generative AI platform, Pharma AI, to build a robust R&D pipeline covering fibrosis, oncology, immunology, metabolism, anti-pain, and other therapeutic areas. The group's unique dual-engine business model combines the generative AI platform with deep in-house drug discovery capabilities, enabling continuous reinforcement learning that continuously enhances the capabilities of Pharma AI and drives scientific innovation. Using Pharma AI, on average, it takes only 12 to 18 months from target discovery to PCC, preclinical candidate confirmation, which is significantly shorter than the traditional method, which takes an average of 4.5 years. The group is also expanding the application of Pharma AI to multiple industries, including advanced materials, agriculture, nutritional products, and veterinary drugs. Pharma AI consists of Biology 42, Chemistry 42, Medicine 42, and Science 42. It's an AI-driven drug discovery and development platform that provides end-to-end services ranging from novel target identification to small molecule generation and clinical outcome prediction, aiming to cover the entire drug discovery and development process. Through Pharma AI, the group has generated more than 20 assets that have reached the clinical or IND application stage. Of these, 7 assets have been licensed to or collaborated with pharmaceutical and healthcare companies with a total contract value of up to $2.174 billion US dollars, including upfront payments of up to $130 million US dollars and milestone payments of up to $2.044 billion US dollars. Since 2021, the total contract value of the group's major out-licensing, co-development, and research collaboration agreements has exceeded $4.6 billion US dollars. The group's AI plus drug discovery dual engine model achieved solid results in business development in 2025 and early 2026. It has established high-value partnership relationships with leading multinational pharmaceutical companies and top Chinese biopharmaceutical companies. The total value of newly signed business development transactions exceeded $1.3 billion US dollars. In terms of out-licensing, the group entered into a major agreement with Taijin Biotechnology, granting it the exclusive rights to develop and commercialize ISM 4808 in Greater China. It has also reached research collaborations with Eli Lilly, Servier, Tenacia Biotechnology, China Medical System Holdings Limited, and Qilu Pharmaceutical Group, covering multiple therapeutic areas. To accelerate the development of promising candidates, the group also entered into a strategic co-development agreement with Haixia Therapeutics to advance ISM 8969 for the treatment of Parkinson's disease. Stock recommendation: buy at $67, target price $75, stop loss $63. I do not hold the above stock.